Good morning and welcome to Equity Story Trade Watch, the 31st of May, Wednesday, last day of autumn. And we've got winter coming up tomorrow. And it just feels like I've been in winter for the last 3 weeks. It's been bloody freezing, especially out in the outback where it's been 0 degrees in the nights, Claude. So welcome. But officially tomorrow we've got winter. What can I say apart from status quo? Nothing's really changed.
Guess what temperature it is in Canberra?
Oh, you guys always get bloody cold out there. So probably like 15 degrees. Am I right?
No, today's warm. It's 14 to 9 degrees.
Oh, wow. Well, you pretty much, it's like shorts weather, isn't it?
But tomorrow we're getting some 4-degree mornings, so that'll be great.
Lovely. Look, I actually like the cold. I love sleeping in when it's nice and cold because I can just rug up under the doona and I can sleep very, very well. I hate the actual steamy nights where you just toss and turn and you just go and get yourself comfortable. So I prefer this, but tell you what, it is cold. So I'm going pretty much every 5 seconds because I'm also not even running any heaters or anything. So I don't even know what I'm doing, but it doesn't matter. We'll survive. We'll survive. All right, Claude, before I start, I want to quickly put on and share the screen of, I think I've got it actually, sharing the screen of Equity Story disclaimer. So you've got, obviously, normally when we talk about stuff, it's all about general advice, and we just concentrate on the technicals and the fundamentals of anything we talk about. So get that over and done with. And what happened last night is, I think it was fairly okay-ish on the US, considering that it looks like the Republicans, or some of the hard right Republicans, want to scatter the debt ceiling, between the top Republicans and Democrats. So that's going to be interesting how they're going to play out. Probably still nervousness and volatility maybe to come. So we'll see, where that leads us to. But, I'd say not rushing into anything at this stage, just sitting back and just holding and seeing what's going on. But at least it's not, the markets are not too bad. So they're sort of holding the line for the moment. Apart from that, I think today we've got the CPI numbers coming out, or indications of CPI numbers coming out in Australia at, let me see, I think we're not far away, actually, about 10:30 or 11:30 this morning. So that should be interesting to see where we are at. I think consensus is about 6.4% versus 6.3 last time. So let's see what the numbers come up, and that will probably maybe move us as well. Commodity wise, and again, I'm going to quickly flick through because we need to see that. So bear with me for a sec, and I'm going to get rid of that and put on, where is it? Economic, there we go. Get rid of that. And I'm going to share that screen with you guys right now. So I'm going to have a look at the commodities because I saw and heard that coal tanked, right? As you can see here, $135. Wow, right? We've had this super boom in coal. Now it looks like a super bust in coal. So probably the way it happens, and I'll have a look at it for you in a second. Some of the coal players are probably not looking too flash right now. Let's see what else. So I think also oil under $80 or under $70 actually. So that's also looking quite weak. So where is some good news in the commodity space? Looking at gold, 1958 is not too bad. I'm just going to flick through down further to maybe lithium, 297. That's okay. That's a rebound of 67% monthly. That's not bad. Other than that, it looks pretty dire, I have to say. So maybe not a good space to be in at the moment in the commodity space. And probably that's reflective of where S32 is, where BHP and where Rio is. So that's not going to help the Aussie market because, of course, we are quite heavy on the resources side of things. All right, so what happened this morning in news-wise? So I'm going to flick the screen. We're going to go through some announcements, and then we're going to go through our thought of the week. And I want to talk about AI because, of course, that's been really hot. Some stocks have been moving. Funnily enough, me and Claude could come up with something similar, so we'll talk about it in a sec. But let's move to the screen that I prepared for you earlier, and that is the Reuters, where you've got the charts. So let's start with the first one. And I know yesterday I talked about briefly Namibia, rumors that the government may be looking at nationalizing or at least taking big stakes in some of these commodities out there that make PDN go into trading halts. And this morning they come out and saying, well, we didn't hear nothing, we didn't see nothing. So, what's actually happening? Not sure. So just wait, maybe that we are bouncing out of PDN. And they're saying that Langer Heinrich, which is good, I think they've got 70% off. That's still going ahead like planned. So I think it's early. Maybe there's definitely some talk from the Namibian government, but there's probably no framework, no nothing at this stage yet. So, still Africa is just very difficult, as you can see. Moving on, KSC, and just joining. Feel free to join in anytime, Claude. And I know that we looked at KSC briefly yesterday, so maybe I'll let you have a talk to it because it has actually jumped up like as expected from yesterday to $2.20. So that's above trend now and looking pretty good. So this sector is actually still pumping quite well.
Yeah, I guess it's a real question, Peter. These have low PE stocks, traditionally sleepy, bad sector. For whatever, I think what we have to ask ourselves, obviously, Lindsay, CLX, we've got a few in this now. I'm not long any of these, but should I be? Is it too late? Have we missed the cycle? I guess that's the kind of concern. That's what keeps people out. Now, these are quite low PE stocks. So as long as their earnings are sustainable, it doesn't really matter if, it doesn't really matter if the hot money flows in or out of it, because you can get a good dividend over time as well. And they own real assets. Now, logically, you would have thought that, these companies with real assets, non-replicable land assets, distribution centers, their core, their essential infrastructure, essentially to our society and how it works. Is inflation just savaging us? What's going on? Does the value of these assets hold? It probably does. But then on the flip side, do you get kicked in the teeth if there's a recession and we have a slowing down of commerce across these assets, which could be seen as commerce facilitation assets? We have a slowing down of the flows there, and suddenly, operating leverage works backwards and their profit falls down quite quickly. So that's the downside of it there. That's what's kept me out. But, Peter, one of the things I'm looking forward to when I'm not going to be writing recommendations and stuff anymore is I would like to be able to do some of these trades. They're a little bit risky and you might have to, go into reverse quite quickly. So I wouldn't say it's the best setup I've ever seen. But, when you have reasonably low PE ratios, I do suspect that these assets across they do hold their place in society, hold their value. And yes, there could be a slowdown, there could be a recession, but yeah, I don't know. I feel like these kind of physical assets, tangible assets, property assets, all of these kind of things typically do all right to protect you against inflation.
Yeah, look, I think you're making a very good point here. It is probably cyclical. Where are we in the cycle right now? And to be honest, you're probably right. The easy early money has been already made. But because KSC has just updated quite well, I know LAU has just updated quite well, I still think maybe there's a little bit back to go, right? So I think that the trade is still on, generally speaking. So I'm still comfortable holding, and I know, and I was disclaimer here that we are holding LAU in our funds. Given that KSC reported very well yesterday, or at least updated very, very well, that gives me that extra incentive to hold on to LAU a little bit longer. And you're absolutely right. I think these assets, and it's because it's cheap, there is that safety in these stocks for the moment. And even though there might be a recession, which I think, probably thinking, even if there's a mild recession, I think these stocks still should probably be okay, because they are almost, for me, I'm classifying them as integral to Australia. They have to move food around, they have to move pretty much, basic goods, things that actually need to be moved around Australia. Not as if it's, it is do I need to? It's a must, right? So I still think these stocks have got a place to play in a recession. The thing is right now, Claude, I think they are probably over earning in this sort of right cyclical, right? But even in a recession, they probably still should make some sort of, I think, profit, right? And a decent performance. So, maybe not going to come up with an 80% upgrade like a KSC is talking about, but 10% I'd be happy still with in a sort of difficult market. So look, I'm still happy to back this sort of sector for the moment. All right, let's move on to the next announcement. That was ARX. So we're going to watch that KS because it looks like a very good chart by the end of the week. It's forming here. So I'm actually intrigued to see how it's going to look like on Friday. Let's look at ARX, which is in that treating burns, treating I suppose wounds and so on in this space, healthcare space. So not a bad update today. I think from just one thing probably disappointing for me is looking at the outlook. And I think, while they've come up with a pretty good update today, that's what 15 to 20% growth maybe is not enough for the market out there. It's seeing a 4% drop, plus still unprofitable as well, Claude. So I don't know. I mean, did you have a look at this story? I actually like this space, but there's three or four players in this space where they still haven't turned a profit yet, but growing its top line. So I'm still maybe not super convinced, but I'm definitely watching these sort of stocks.
Yeah, I definitely think it's worth watching this one, Peter. I think that, from memory, they still got a fair bit of cash in the bank, about 45 million or something like that. But they did have in the last year free cash burn of 10 million. And so that's why I've been kept out of this, as love small caps, love growth stocks. So generally speaking, ARX is something that I would look at. And as with these other ones as well, I've looked at in the past, Avita and Polynovo.
Yep.
But obviously I've already, I own just a couple of these sort of loss-making growth stocks at the moment, and I've taking a real whack on both of those, and I would have got a whack on it was just the whole sector is just on the nose, So the most I can bear is, just like one or two. I don't want to get too heavily into these more speculative things. When the market changes, when we start to see a bit more bullish behavior down in the small end, I reckon I would jump on some of these. Look, this is growing quite fast, could be quite a high margin business sometime. And yeah, its market cap isn't insane either. So it's just still loss making at the moment, but we could definitely see it come into the profit even in maybe next year. So I find it very interesting, and in a bullish market, like it'd be the kind of stock that I definitely consider dabbling in. But now I just think that whole classification, they're still in the doldrums. So I wouldn't want to be like maybe your one or two punts for the ones you really want to not miss out on and are willing to take the pain trade. But it's a difficult trade for these ones most of the time. We're seeing some of them kick up now, like we were talking about Catapult had a bit of a run and stuff like that. Some are kind of coming off the bottom. And so I guess, I think that this one probably does have a future, so if there's a high beta, like kind of run, then, lower interest rates, this one would be good for this kind of business, but just been tough for them with the interest rates going the way they have.
Look, I 100% agree with you. And in this market right now, right, our fund portfolio is slimmed down, right? So it's really focused on really quality stuff. And this is just surplus to requirements, this sort of stocks, right? So you're thinking in a normal market where you've got more, I suppose, positivity and so on, you might look at this and go, I might maybe have a punt on this or whatever. But in a market like this, it just doesn't quite cut the mustard at the moment. And I agree with you. I think it's got a bright future if they can play the cards right. But for now, it just doesn't quite equate to a investment on my part. So yeah, looking at it, watching it, but just not quite there. All right, let's move on to the next one. And now, okay, let's talk about coal stocks, because first of all, SMR came out with just an update saying how things are going. And look, again, not everything's created equal. With SMR, it is all about coke and coal, right? Still, coke and coal is getting affected by iron ore dropping down. So it's bringing everything else down with them. So as you can see, this was a sell probably about 3 weeks ago. And you wouldn't probably be in it now. It's maybe coming back to $2.26. But I prefer the coke and coal to thermal coal. And the reason why, of course, you've got that, we'll probably have to keep mining coke and coal forever, right? But with thermal coal, we could move away from thermal coal where we won't need it for energy, and we can just use some other means to generate that. Obviously, we can see where we are moving towards that. But, look at WHC, for example. Let's look at some of the other stuff just to see exactly where they're at. Right. And you can see, I mean, that you probably was a sell right there if you're, pretty strict. And it's even worse. It's just getting worse and worse. And, I've warned everyone about this. Just get out of coal for the moment, because it's just heading down and down and down. And he's just proving to that. And, possibly now it's looking at $5 quite easily. And maybe that's hopefully the last stop.
And I think we've seen the coal bubble for now. Like that's
Absolutely. I agree. 100% bubble's gone. It's over. Bastards. Burst.
It's a classic thing, for that year, basically, unless you're playing in the energy space, you're underperforming. So it just becomes a thing where anyone who has a business that they're like measuring against the market needs to get into coal all of a sudden. So you have a re-rate, can go the other way as well. So
yeah. So right now you're out of coal. You're not touching that space. It's just we got to wait till it bottoms, and then we maybe start looking at it again, right? That's just
one of my biggest regrets is like I called that this coal thing was going to happen in like 2021, but I thought, oh, am I going to write about it? Am I going to invest in it? I was like, nah, it's not my thing. I don't like it. And I was like, oh, come on, I should have at least written about it so other people could have.
Yeah, well, now you're with us, Claude. You'll be able to do that sort of stuff, right? And we'll be able to write it up.
No, now I just mean to get forced to say my opinion. Usually I'll just say nothing.
No, you can just go for it. We like different opinions. It's all good. Actually helps us be better investors. But anyway, so SMR better, but no. NHC definitely out. WHC definitely out. Anything else coal related probably out. So
I think it's coal's going to go back to underperforming probably for a while from the look of prices anyway.
Yeah, definitely. Let's look at a couple of energy stocks. WDS, right? So we saw the oil prices sort of waning a little bit, and it's still, well, give it credit where credit's due. WDS is still holding quite well on the charts, so it's still a hold because it's still a dividend play. So overall, and they've got long-term contracts anyway, right? So it helps them. So from that point of view, well done to them. Let's have a look at STO. I just want to see exactly where these guys are, because I know we talked about it a little bit earlier about STO going okay, and it is. So those two, fingers crossed, they can survive and not plunge below the trend line. So for those holding in there, technically it's a hold. All right, so let's move on to the next bit, which is iron ore, which we talked about again. It's struggling a little bit. So CIA today came out with their report, right, for the full year. Now you look at it, and there's definitely a theme there with CIA, and probably iron ore players, and that is cost surging. Iron ore prices are coming down, so there's a crunch happening. The cash flows are reducing significantly. I think the cash flows went down about 60-70% for CIA, right? It's still a company that's profitable, because I think the overall costs are, which is the AISC, are about $75, and they got like 140 something for the iron ore they were selling. But I'm seeing further issues in 2024, so I think that crunch is even going to go, coming closer to the cash flows. So I'm probably, if I'm in this, I'm probably thinking I should not be in this. I'm probably thinking you should be probably out of it. So you should have already sold out of there, right? Under $7. And if you haven't sold out yet, I'd say your last chance is probably right now to get out, and because it probably could go back to the $5 quite easily. So if you're still in this, if you ever think about it, technically it's a sell. And these sort of results makes me even more nervous, because when I'm looking at FY23 was still pretty good, but I'm seeing further crunch in FY24, right? That's my sort of prediction. So I'm thinking that happens, this is going to come down further. So I'm just going to leave it at that. Next one, 360. So update, look, for them and tech space in general, that's actually going quite well. So I just want to see what the market reaction is for 360. And today, I think it's fairly sort of nonplussed, 0.4545%, which is not too bad. It's actually holding a pretty strong trend, daily trend. So for me, it's still a definitely stock you might have a look at for a trend out there, or a trade. And it's not a bad story out there. 360. Claude, have you got any, your own opinion on 360? What do you think it lies in that tech space?
I think that the real problem with this in terms of being a nice story was the buying tile. I think it was a bit of a diversification.
I agree.
Other than that, I feel like they kind of built an edge because what they're doing is they're legitimizing the intrusion into the lives of one's wife and children and each other, I guess, or a wife to a husband, whoever it's going, it legitimizes like a high level of surveillance of family members and encourages it. And there's a bigger conversation about like, you know, whether you actually want to live in a world where it's normalized for a husband to track the movements of his wife and 3 children. Maybe we lose something as a society if that's normalized, because it really exaggerates your luck in terms of what your family is like. You know, there are plenty of children and people out there who have a tough relationship with their parents, and you know, having their parents track their every move would have exacerbated that same, of course, relationships. But that's not really the point. The point is what these guys are doing is they're legitimizing it and they're whitewashing it and trying to make it okay. And that's their edge, because they're making it socially acceptable to have a high degree of tracking. And keep in mind, this is not opt-in tracking. So 360, it could have its app, a button where you say like spoof location or whatever, and it just shows you, like pauses you in your current location. And then you can go around and do whatever untracked. If it was an app designed to just check on each other when you want to know where each other's are, that's what it would do, but it doesn't. It's like, you can't tell it to just keep your location there and tell the other person you haven't moved. So as a result of that, I think it has an edge, and that's where the value lies, because that's like the brand value, right? And Apple even moved away from marketing their Apple tags when it came out that the Apple tags are being used for creepy tracking and that kind of thing as well. And I think they still have them and everything, but they're just like, oh, they're not really leaning into it. Now, ultimately, I think the threat for these guys has always been that you just become the feature of Apple, right? You know, Apple already has Find My iPhone, blah, blah, blah. But the point is, all of that works for like, not really so much for tracking people, but just for like if you've lost your iPhone or something like that. Whereas this 360 is about actually tracking people and knowing where they are all the time. So yeah, it has a little niche there, and I think it's going to be around for a very long time. You know, valuation, it says it's improving its financials. I'm not super impressed by its financials personally, but I can definitely see how it will carve out that little niche. And it might actually continue to exist and never really become a feature of Apple's product or whatever, because other companies don't really want the ick factor.
Yeah, look, I agree 100% what you said, right, with 360, and it's a very divisive thing for me. You know, the tracking versus there's actually legitimate reasons why you want to see where your kids are, for example, right? So there's an argument completely against and the people will hate this and people will love this. So
but no one's forced to use it, right? So it's fine. Right. Like not like, that's the question. Are people forced to use it? But you know, ostensibly no one is forced to use it. So that's why, like, it's not going to have it. I don't think it'll have too much. There's not too much risk for Life 360 there.
Exactly.
And in fact, that kind of ickiness might be a bit of an advantage, because that might keep some of the big guys away.
Yeah. Look, and it does have some interesting features, like if you're in an accident, it reports back, and, you know, cannot have this. So there's some interesting stuff in there, and they can maybe build on it. And for me, Claude, at least they've got a product or service to sell. And I have to say, I hate the tile acquisition, by the way, but, you know, it does have a product they're actually selling and making money off, right? It's sort of like maybe a Facebook that is got a free service and they just get advertising to actually make the money for them, right? So there is a...
Yeah, and I think like I was saying, I always thought, you know, previously, if you'd asked me some point in the past, I always thought, the problem with this is it just becomes a feature of, you know, someone else, you know, Apple, whatever, like it just gets subsumed by like one of the big device companies. They all just make everything as a piece of software that everyone gets bundled in their phone.
Yep.
But maybe that's not going to happen, in which case, yeah, they potentially get a profitable niche.
Yeah, no, I agree. And I think there is a niche there for them. And, you know, as much as I hate the tracking side of stuff, I can definitely see there will be a niche people that will use it, right? So definitely.
Yeah, there are definitely legitimate uses.
Yeah, for sure. Okay, so look, it potential is there. Tradable, yes. Chart at the moment saying hold if you're in this. And we'll probably look at it at the end of the week and see where we are at. All right, so thank you for that. Now, a couple more before we go into the thought of the week, because I know we're struggling with time. So PPE quickly updated that we're going through our review, and really after the review said, well, just keep going how we are. I think they were thinking that, yeah, we're going to find someone to buy us because we're so cheap. We're going to, make things, but nothing like that came out. And so, yeah. What did you think?
Yeah, I think it was just like a nothing burger for the announcement. They reiterated guidance. That's not particularly exciting.
Yeah, the overall is just struggling because there's a perception that RBA wants to smash the unemployment a little bit higher, and the sector is just viewed right now as negative. Unfortunately, that's what it is. Even though the company is still coming up with decent results, right? So
yeah, that's pretty much where we are with it.
All right, last one, but not least, AMI. I'm not sure if you follow this one. I think I know that you did sometimes, but this one's come out today just saying that they've got a new CEO. And interestingly enough, ex-OZL, so ex-Oz Minerals guy. So I think maybe there's some legitimacy here that they'll start making some big noises, right? So I'm intrigued to see how they're going to go, which path they're going to take, because, for me, it's a small-time player, small mine. Things can go wrong, things can go pretty much south quickly with small mines. So I wonder if they're going to start looking big, right? Just from the new CEO that's joined in. So I'm going to be watching with interest, because if it starts trending again, that may be something that we have to have a look at. But just from that, looks good. All right, let's move on. Thought of the week is AI, and I know it's big over in America, and I've got a lot of interesting stocks. Nvidia's just gone through the roof. Microsoft's going quite well. We've looked at some other stuff in there, but we come back to our little Australia, Claude, and really there's a struggle street when it comes to AI. But we want to find somebody, because we know we're investors in Australia. So have you got anything long term where it's actually we are beneficiary out of the AI revolution? Tell me, have you come up with a story for us?
Yeah, so my idea today, Peter, is Macquarie Telecom, it's called. It's about to change its name, actually, to, in the process of changing its name to Macquarie Technology, I think.
Oh.
So it's rebranding a little bit for investors to remind them that, hey, it's not really just a telecom anymore. What these guys do is manage cloud services for government. They do have a shrinking telecom business, or stagnant to shrinking telecom business, and they do data centers basically for government, and also just generally. And so that's my angle here, is essentially, look, if AI is going to start getting much more involved in workflows, then I think that that's going to happen. That's going to require more like data processing power, and also that's going to require ultimately people to like implement and help implement that, because a lot of whether it be government departments or big companies will outsource some sort of big IT project like that, and managed services is sort of a way of outsourcing that. It's the more modern way, really. The IT is moving a little bit away from like project-based engagement, because every company wants to have some sort of ongoing recurring style relationship in the space now. So yeah, that's how it could twofold benefit through implementations and managing services, and also just through demand for data center and connectivity. Perhaps not the best, AI beneficiary, but I don't think there really is a lot on the ASX that like directly benefits. So, the downside of this is, based on annualizing the first half profit, it's on like 75 times earnings. So pretty expensive already. Bit of a sociological trade, being like, you've seen some of the things in the space, pop up, and it's a bit under the radar. Look, a director did buy shares at just under the current price. So I'm not saying that it's insanely high price, but obviously it's a high price stonk, as it were.
Yeah, look, I agree again with you 400% here. And I reckon if they shed the telecom stuff, this would be better, right? Much better. I think they should stick to the growth side of things. And maybe they will that when you get to technology, right? Maybe there is a plan in that to offload some of these underperforming on non-core assets with time. I actually like the chart here as well, Claude. So yeah, I think you picked a good one. So from me, value is very difficult to find in good stories, right? I think that's a pretty much given for me. And I'm happy to buy a good story that's trending, that there's some, positivity in the fundamentals and so on. So I'm happy to pay 50 times as long as the story's got some legs moving forward. Then I'm okay with it. And I agree with you 100%. And I'm 100% convinced that there's going to be an influx, more data needed, data storage needed, processing power. It's just going to grow exponentially, or keeps growing exponentially. So I think for me that's a given. So you've chosen, I think a very good story. Just thinking, and I'm going down the same line as you are, and I'm going with NXT, which is a pure play data center company, right? So for me, we've already had a bit of a jump of it, right? And we talked about it enough. But when you see them moving towards Asia, I think New Zealand one is another one that they're going to build, and in Malaysia is another one. So this for me is a long-term play, and every time I'm thinking, okay, these guys are probably just need to take a breather, start actually be profitable. But every time it comes to that point, this space seems to just cry out for more data storage, right? So they go, okay, well, we need more. So they're going to go and spend and capital raise. And again, it's just maybe like a vicious circle. So it's not a perfect story by any stretch of imagination, but I think, there's definitely, attractiveness for me that it's just such a long-term story that the data processing and data storage and, the growth for robotics, for AI, it's just, for me, it's just so huge. It's hard to sometimes imagine how this, I think people are scared that, we are going to be ruled by AI eventually, and, it could be probably true. So yeah, look, I like this space. So I'm liking your MAQ. I'm definitely going to put it on my watch list, and NXT is another one that you can probably play with in this space. But like you said, right at the beginning, very difficult to find anything pure play. And we are struggling. So we're going to keep looking for more stories to probably add to that AI space. But for now, I think this is a pretty good attempt.
Yeah.
So thanks for that.
Yeah, look, I think they're both good. I think that my main concern with both is probably the thesis would be more of a momentum thing and more of a sociological trade. Like, it's a bit of a hot space. You could be like, oh, it's a hot space, but I think it's getting hotter. And that may be so. But does that mean you've got, a good valuation on either of those? I'd be less confident, but there's room for different kinds of, ways to play it.
Yeah, I think just to finish it off, I think at least I've seen some NXT updates, which were pretty positive, with some strong utilization rates, and and just commentary that there's definitely demand. They're selling that, the capacity that
exactly. You got the demand tailwind, and that,
exactly.
And I like to invest in tailwinds generally. That's probably the one thing.
Correct. So that's what at least gives me that confidence that maybe this is not just a momentum with AI. I think there's something there with the AI, and it's actually the space that it's in, the sector that's in. So I'm fairly confident that we're hopefully on a winner here with both. All right, thank you so much for that, Claude. I appreciate every time we have a chat, and you join me on Wednesday. Have a great day. I'll probably see you on Friday. Thanks everyone. Cheers.
Thanks for watching, guys. Have a great day.